Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, April 29th. Hope you guys have a great weekend here. We're off to a great start here. We got some important data to go over, so we'll jump right into it. We'll start with the personal income. We all like to know what we're making, right? So in previous reporting in February, it was increased by 0.2%. Forecast was calling for a 0.4% increase. However, it came in lower than expectations. Of course, we all would like to see a 0.4% increase, correct? We also got on the other side of things, consumer spending. So we see increase of 0.1% in February. Forecast was calling for 0.8% in March, and they exceeded that. So people are making income went up, but not as much as we like but the consumer spending went up. So the good thing about this consumer spending is we need that moving to keep the economy going. So that's obviously a good sign that people are feeling a little bit more comfortable with things and are spending money to keep things moving along here. Now we got the Fed's favorite gauge of inflation. This is the personal consumption expenditure, or PCE. So the previous reporting came in at 0.1%. Forecasters continued to be at 0.1%. However, it did go up 0.2%. So the year-over-year rate over this increased from 1.3 to 1.5%. Now, Fed's favorite gauge here is at target rate is at 2%. So we're below the 2% rate here. Now, when you take out food and energy, we get what they call the core inflation. There's another name for this, is core inflation or core PCE. They take that out because it's a little too volatile and it's something that that cannot be controlled. So this is what they can control. Previous reporting came in at 0.1%. The forecast will continue to be at 0.1%. It basically came in at zero. Its year over year, however, it dropped at 1.7 to 1.6%. So this is what the Fed will be looking at. They will be meeting this week, starting tomorrow, and be giving their announcement on Wednesday. So the investors will be watching to hear what they will be saying, and they do not expect any rate hikes or rate movement today at this meeting here, but they will be listening closely for any signs for upcoming meetings, anything that could happen. So headline news: stock market's up, but kind of tentatively. It's not really. It's kind of slowly moved its way up. We got some corporate earnings reports kicking out this week. The data, of course, and then of course the Fed. They're just kind of waiting. They want to be a little cautious ahead of the Fed, especially right now when they're at the new high, at reaching new highs again. The stock market was down a little bit and then worked its way back to the new highs that we saw earlier in the year. We also have China talks resume, where our Steve Mnuchin and Lighthizer are over in China right now, meeting with the Chinese officials over there to resume the trade agreement. Also, there's word out that the North American trade rules, the former NAFTA that was being recreated, is running into a roadblock in Congress. It sounds like they're trying to play a political game and maybe hold that up and may not be able to pass through Congress. So that's kind of disappointing. So let's kind of move this forward and take a look here at the bond market, and the mortgage-backed securities are down to 5 basis points, which translate no change in rates. So this isn't enough to move mortgage rates to one direction or other. So basically, they will remain unchanged. Here's the Treasury. We're up a little bit. We were up down to 2.5 last Friday. Now we're back up to 2.53. So we're starting to get a little bit more pressure from the yields today. So the good news, no change in rates today. Stock market's up a little bit. We will have some volatility this week. We'll have to hear what the Fed says with their 2-day meeting on Wednesday. And you guys have a great rest of your day. Thanks so much for watching. I'll catch you guys tomorrow. Thank you very much. Bye-bye.